number, nor it is in three-digit numbers. So apart from that, that balance leftover will be can easily be used for this working capital requirement for the business, and I don't feel that there would be much issue in utilizing this, and there will be not much challenge on the side of cash flow also going forward with this healthy profit coming into the business.
Right. And would you be able to tell us the debt number as of December?
So roughly in the range of 155 CR.
Okay. Thank you. Congratulations on all of this.
Thank you. The next question is from the line of Bhargav from Ambit Asset Management. Please go ahead.
Yeah, hi, good afternoon, team. And congrats on this year's number. Yeah. Sir, in the presentation, it is mentioned that Europe is already seeing good business and future growth on the exports will come from Middle East, Africa, and US. Now, given that you are focusing on these new markets, why are we guiding that exports will only remain about 20% of overall revenue and not increase?
See, definitely,
Yeah, definitely it will go more than that. But for at least for the next 2 quarters, we are targeting our exports will be between the range of 20%. But in the long run, if you say for the 4 to 6 quarters, so definitely it will go up because for the developing a new market in the export requires the export process of the plant as well as the client approval. So that takes almost time to, we can say, 5 to 6 months. So right now for next 2 quarters, we are targeting almost 20%, but definitely in export side, you can see growth in the next, after the 3-4 quarters, definitely you see the growth, more growth.
Yeah, so sir, if we take, say, a 2 to 3 year view, is it fair to say that exports can reach closer to about 35-40%, or that is a far-fetched number?
Bhargav, we are targeting, but right now we can't much say about that. Once our project will be approved in the coming quarters for the US market and Middle East market, then we can further say how much we can achieve, Bhargav.
And so these will be altogether new customers that we are targeting, or it could be the same company having a manufacturing operation in US or Africa?
Almost new customers we are targeting. Because in the almost mostly right now we are targeting our export in the territory of the Europe only, or the Europe clients. It doesn't have the much presence in the Africa, Middle East, or we can say in US. So all will be new customers.
Okay. Secondly, sir, you mentioned on the export side you make higher margins. So is it because the sector mix in domestic is different from the sector mix in exports, or is it that the margins are only higher on the export side?
The margin is basically only higher when we sell in those territories where we are currently selling.
Okay. So the mix is broadly similar, chemical, engineering, across exports?
In case of export, currently we don't sell to end-to-end industry. We are selling to trader, distributors, or stockists of Europe.
Okay.
They in turn sell to the industries.
Okay. And lastly, sir, you mentioned about 155 crores of debt on the balance sheet. Do we have any milestone by when we want to become debt-free, or it is too early given the high growth phase we are in?
The endeavor will always be to be a debt-free company. But see, it's not, if you see, compare my debt equity and other issues, not a very high debt, or it's a near debt, you can say. So intent is always to get it, but see, it's a growing company. The volumes and value of sales both are increasing multifold. So requirement of working capital would be there in the business. So, but the target will always be sooner become a debt-free company, but it will take some time, I believe.
And this working capital side on the stockist, I presume, would be higher as compared to on the direct business, right?
So if you see a stockist and trader in India, that's not high basically, because they in fact lower tenure as compared to when you sell to end industries.
Acha. Okay. So should we work with 100 to 120 days of working capital cycle as compared to about 135 days?
100. Yeah, 110 days of working. You're right.
Okay. Great. Thank you very much and all the very best.
Thank you. The next question is from the line of Karan from Swan Capital. Please go ahead.
Thank you for the opportunity. I'd like to congratulate the management of the stellar numbers they posted. So our company has, so my first question is, so our company has aggressively been expanding its seamless facility over the last few quarters, and we've also spoken about how the anti-dumping duty on Chinese-made seamless pipes, introduction of BIS, export incentives which have been withdrawn by the Chinese government has impacted the supply of seamless pipes in India. So my question is, if anti-dumping duty or the BIS provisions were to be withdrawn and Chinese-made seamless pipes were to flood the market again, how would this affect our company?
See, definitely, the anti-dumping is there for 5 years, so I don't see any reason for it getting withdrawn. But see, the intent of our company is to be supplying to varied number of sectors, so right to supplying our good to pan-India and also supplying to the various part of the world. That's why we are so when we have been successfully increasing our sector, we are successfully increasing our presence throughout India, and we have been successfully able to win on the part of the world front also. So, and also to keep on adding the right number of sizes, the right number of grades of pipe what we can cater. Also, you can see in case of welded, we can manufacture up to 56 inch dia, which only few manufacturers in the country can do. So we are trying to make ourselves a company which can serve the majority of the garment required for SS category of welded pipes and tubes and seamless pipes and tubes. So that if any chance some type of government policy or something changes, we are very negligibly affected by this. We become a unique company which can be differentiated from any other company which are there operating in the country.
All right, sir. And my second question is, you mentioned that Ratnamani and Jindal Saw are your competitors. Now, we are in an industry where in stainless steel pipes, there's not much of product differentiation. So what stops our customers to go to them?
Can you repeat? I'm unable to take it.
I'm sorry, I'll just repeat again. So you mentioned earlier that, there's Ratnamani, there's Jindal Saw who are our competitors. And we are in an industry when stainless steel pipes, there's not much of product differentiation. So, what stops our customers to not take from us and go to them?
See, everybody has their capacity constraint, be Ratnamani, be Jindal Saw, be one. And there is a demand in the market from export, from internal, and there are a lot of smaller players also operating in this zone. So you always have a leeway to capture those smaller players who are operating in the market. There are increase towards sectors. There are number of sectors like railway, paint, and other sectors which we were earlier not catching. Now we are catching. And see, so the customer has to come to. It can't be restricted to one or two because if everybody comes to me, I would be having my delivery constraint or my capacity constraint. So it will be mixed bag always. I feel so I won't be that much affected by two or three of the competitors.
All right, sir. Thank you so much and all the very best.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Harsh Mulchandani from Chris PMS. Please go ahead.
Yes, sir. Thank you. First of all, congratulations on great set of numbers. Always, we've seen your performance is bang on. Wanted to understand a bit more on the export front. While it's good to have diversified geographies, but why don't we double down in Europe and, get a higher market share because we already have an entry over there? This is my first question. And the second question is, what is the key breakthrough for us which, we can look to achieve in markets like US, Middle East and Africa? Like the backward integration was a key enabler for us in Europe. So what would be the key enablers for these newer locations which we are targeting?
See, the intent on the side of export, it's not, you can't fix yourself to any specific sector or any specific geography. The better the price you get, the better you save towards that. So that is the intent basically. So definitely if the prices are, we keep on getting a higher prices, you can see a higher volume growth on the side of Europe also as compared to what we have achieved in this quarter. So the intent is to cherry pick those orders wherein the margins and capabilities are coming on a higher side. And see, definitely Europe, the backward integration was key to increase on the front of Europe, but other part of the country, be Middle East, be US and other Africa or other location what we target. See, it will be number of SKU what we can serve will definitely help us to penetrate that. That will be the one of the factors, supplying the quality product and getting and having the requisite qualification to qualify for all those zones.
Got it. Makes sense. Just one follow-up question. Our market share would be negligible in Europe currently, right?
Right.
Got it. Okay, perfect. Thank you so much. Yes, sir.
Thank you. The next question is from the line of Pallav Agarwal from Antique Stock Broking Limited. Please go ahead. Mr. Pallav Agarwal?
Yeah, hello. Sorry, yeah.
Yes.
So I had a question on the other income. So this quarter, it was higher than significantly higher than the previous quarter. So any particular reason for this, and is this sustainable for the quarters going ahead?
A slight bit of basically exchange gain and all, not majority, not much about.
Sure. Also, just on a question on the competitive scenario, because we've heard of, Man Industries also, probably venturing into the stainless steel pipe segment. We also, we've also seen Welspun Specialty also ramping up their production of both seamless tubes and bars as well. And there was news that Shah Metallics also acquired, Mittal Corporation. So, what's the broader view on the competitive landscape going ahead?
Right now, Pallav, we have heard about the Man Industry. Definitely, Man Industry is expanding their capacity, but Man Industry will be expanding their capacity only in the seamless pipe segment, or they are putting up the extrusion mill, which is a very high capex intensive industry. So in the seamless front, definitely competition will be there. But due to anti-dumping, still there is a lot of, we can say, demand in the seamless front. There is a good demand in India or in the international also. The seamless pipe from India is well accepted in almost in Europe market, in other market also. Or almost all the stockists and other players prefer to buy from India, but due to lack of capacity, they are not able to buy from India. Or if any other player will come, the usage of the stainless steel also growing. But if any new industry will comes in this line of SS pipe, then again the question of the approval will also arise. Because to set up the plant and after approval, there is a long journey. If any new player is coming, so definitely they will take time. Or by we can say next 2 to 3 years, Venus will be in different position or will be an established player in the SS pipe industry, or we will able to get almost all the approvals in the coming years. So Venus will be, or our focus is to develop the core or critical product. We want to go in the critical product where high margin is there. So we are target in next 2-3 years we will develop the good product where we can get the consistent order, we can get the fixed buyers for the product.
Sure. So and also we will just throw some light on the US duties. So we are targeting the US market, and a couple of other players also are doing the same high margin products in the US. So what is the current level of anti-dumping duties and tariff barriers that are there in the US right now?
Yeah. In US there is a two type of duty. In the welded front there is some AD and CVD is almost 13%, which is applicable all the suppliers from the internationally, or especially they have some 25% special duty under section 232 for all the imports coming from all over the world. So in the welded, because there is because in the 25% duty of the section 232, some of the traders get the benefit in the seamless front because there is not much capacity of the seamless pipe manufacturing in US. So they are getting exemption for the supply from the India. Normally they apply to the ministry in the USA. They got the exclusion for the duty stricter. So in the seamless pipe, there is a good demand in US, or same in welded front. Due to their local manufacturer, after paying duty from the Indian product, whatever we supply from the India, our product completely cheap compared to the US producer.
But just on the nutshell basis, if you see section 32 tariff is there on majority of the country which export to USA. But there are specific AD and all which are there significantly high in China, and also there are some section 301 duty in China, so which make Indian good quite competitive as compared to China in US. Hello. Hello. Yeah. Hello.
Yes, sir.
Yeah.
Sir, Pallav's line has got disconnected. I'm
I
connecting.
think that. No worry.
Yes.
I'm on the call?
Yes, yes.
Yeah, okay. Thank you, Arunji.
Yes.
Thank you. The next question is from the line of Part2 sir from Investec. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity, and congratulations on good set of numbers. Sir, I had two questions. One, you mentioned that, on seamless and welded front, you are expecting approximately 50% incremental margin expansion from here on. So what would be like, over what period can we achieve this?
See, for seamless, we have started achieving those margins, and in case of welded, to a good extent, we are, but I think from next quarter or first quarter of the FY25, I think we'll be probably achieving that.
Okay, so seamless, you're already doing that, and for
We'll do
welded,
that, yes.
it will be from Q1.
Yeah.
Right. Okay. And sir, the other question, this mother hollow pipe backward integration that we've done. So how much of seamless pipes can we, manufacture on the back of that?
See, currently, the capacity is there to which can cater to our to a good extent to our current manufacturing. But as we said, we are further will be starting 200 further metric ton by end of this financial year. So there would be a bit of gap in that. But if you see the anti-dumping, it is for up to 6 MPa size of pipe. Beyond that, there is no anti-dumping. So the leftover portion will be imported by us, wherein the anti-dumpings are not there.
Okay. Okay. Perfect, sir. Those are my questions. Thank you.
Thank you. The next question is from the line of Nihar Shah from Crown Capital. Please go ahead.
Yeah. Good afternoon, sir. One small question on our guidance, which we had given earlier in Q2 call, which was 35% revenue growth for FY24, but in 9 months we have seen around 54% growth. So are we looking at 55% mark for the entire year, because historically our Q4 is better?
Yeah, see, the guidance, I think, near to that only as compared to FY23, because range bound of 40 to 50% only, and I think we stick to that.
Okay, so 50% growth.
45 to 50%. Yeah, year on year.
Okay. And years going ahead for FY25 and ahead?
See, FY25 will be again a good year, because many of the capacity would be utilized to a good extent, I believe, in the range bound of 30 to 40% from FY24 if I compare.
Okay. That works. Thank you.
Thank you. The next question is from the line of Saurabh G. Jan from SG Capital. Please go ahead.
Hello. Good afternoon, sir. Congratulations on a good set of numbers. So my question is regarding the market size of the SS pipes and tube industry in India. So what is the total market size as per you, and what is the market share?
Yeah, we don't have any perfect right figure, because there are many of the players who are not listed in the geography. So, but a tentative what we have worked out, annual demand of India is roughly in the range of 3 lakh tons, taking both seamless and welded, wherein welded should be in the range bound of 60 to 65%, and balance should be seamless.
So how much that would convert into value terms?
It can be depend on sizes, prices and grades and all, roughly mix and all. But at least I think at least more than 10,000 crores, I believe.
Okay, sir. That's it, sir. Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to management for closing comments. Over to you, sir.
I take this opportunity to thank everyone for joining the call. We will keep updating the investor community on regular basis for incremental updates on your company. I hope we have been able to address all your queries. For any further information, kindly contact SGA, the investor relation advisor for your company. Thank you once again.
On behalf of Antique Stock Broking Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.